What is up, guys? Welcome to another episode of Get Technical. Technical. I'm Neil's older brother, Nathan Hamilton, and with me today is the one, the only, the eagle-eyed
Neil Hamilton,
the 2020 vision, Spencer Israel,
aka Neil Hamilton.
aka Neil Hamilton. With me is Neil Hamilton. You got two Neil Hamiltons and Nathan Hamilton. I'm Neil's older brother. Hey guys. Hey Shelly. Hey Mike. What stocks are we watching today? Let me know in the chat.
Lucid, Hood. I know Neil's watching Hood.
Oh wait, hold on one second.
Producer AB is not here because he spilled Red Bull all over his computer this morning. And
That's some bullshit.
That is not bullshit. Actually, he did spill Red Bull.
Classic AB. Am I right? Spilling stuff on his laptop. Sounds like some stuff I used to do in the dorms.
Spying QQQ. What is QQQ? What does that even mean? I wonder why they called it QQQ. I think I should know.
NASDAQ ends with a Q.
Oh wait, that does make sense.
This guy needs to get a grip. Am I right?
That does make some sense, actually.
All right, guys. What stocks are we looking at today? I want to look at Apple because it might be doing something crazy. I also got stopped out of BGFV real bad. Hey, do you guys want to talk to Luke Jacoby really quick? No, Spencer.
Yeah. Oh.
Hey, what's up, guys? Welcome to Power Hour. All right? Okay. First up, we've got...
Wait.
First up, guys, welcome to Power Hour. Welcome, Zinger Nation, Bloviation Nation. First up, we've got, you know the stock, Apple. Let's take a look.
Don't forget, this is Zinger Nation. This is the Power Hour.
What do you think about that, Jason?
This is very good. Happy Tuesday. It's Wednesday.
All right, I gotta work. Okay, guys, if this is scary. I'll take care of it. Just 1 second. I figure out how to make it go away. 1 second.
Well, while Neil does that, I'm gonna bring up some charts. Check it out. Got some Apple up on
my chart.
That's okay.
All right.
We got some Apple. Let's go full screen on Apple. Get rid of that comment on the screen. Okay. What are we seeing here? Oh, I like this. You know why I like this chart? It's so clean, right? It's not. Sometimes you look at a chart and you got all these indicators and moving averages and this and that and the other, and it's like, oh my gosh, what does it mean? It's so confusing. I like clean charts. Volume off to the side. You got a couple indicators down below. Volume profile. It's going to be volume profile off to the side. Volume down below. You got some R.
All right, I got rid of them, guys. Don't worry. All right, so you want to look at okay, so Iron Lion is asking, should I get rid of Lucid LCID? I don't know. You should do what you feel, what your heart tells you. There's nothing super imminent that I see happening here, other than potentially pop. So we can go down. We can go lower on Lucid Motors, LCID. Holding this level of support, but look at this cove that we've got below. So your potential here, just going by the price structure on LCID, I'll go to the very top of the wick down to the neckline, which is pretty much the line that I drew. It gets us a bit lower if you're just using like your classic like pattern analysis. But we all know that the patterns are squishy. So what I would say, is that if we're crossing this line, we're looking to hit this level right here. You know, there's a couple other levels that you can catch. Actually, this one, what is this? $20. Might catch at $20. To me, I think so. So my take on Lucid is bearish right now. Shelly, yeah, we can look at Apple for sure. So we just
Hola, Monsieur.
Hey, senor. You missed Luke was here a second ago.
Shoot, I love that guy.
Yeah, Luke, I love that guy. All right, so we're gonna look at AAPL, Alpha Alpha Papa Lima, guys.
Wait, I just talked about this on the other stream, but did you know that? Wait, here, I'm gonna.
Are you gonna repeat stuff? Are you gonna repeat content from other shows?
Well, it was my content on Power Hour, but I don't know if you know the fact. I just it's like a very interesting fact to me.
All right, what is it?
So the revenue from AirPods alone from Apple. Wait, actually, here I have it on my screen. I'm going to share it to you. So I don't know if you're a visual guy or an audio guy, so I'm just going to share my screen.
I like the full sensual experience.
Okay, the full. I'll give you the Apple ASMR. But the revenue for AirPods is greater than the total revenue for Adobe, Uber, Nvidia, I will say, okay, this was in 2020. This is on Reddit, but it's on r/data is beautiful. So I assume the data is correct. But, you know, I mean, look, you can take like the revenue from Snapchat, Shopify, Twitter, and Square, add them all up, and they still don't equal the revenues from AirPods alone. So if you're ever questioning just how massive of a company Apple is, you know, I think that answers the question.
Yeah, that's crazy. Can you hold on one sec? Keep that open. I think that's really interesting. I just want you to keep that open, please.
All right. Should we check out some other subreddits? Let's see what that's. No, I'm not going to go to the comments. There's probably some crazy things there. But you see this one right here. This is the left AirPod. This is the right one. I don't know if you guys are team right or team left. I like my right AirPod, I think, more. Okay. Well, should we do some technical analysis on this chart real quick? We got Snapchat right here, Shopify right here, Twitter right here. Yeah, so I mean, I agree. This is kind of insane if it is true, but we will see. Hopefully, we have some fact checkers in the chat. Let me know if it's real. Let's see what else we've got on here. Okay, something about ED. We've got some job. Okay, here's some good stuff. This is like Olympics, some same-sex marriage in Europe. All right, but this is not what you guys came here for some data is beautiful. Let's get back to some stocks. I don't know where Neil is. Hopefully he's coming back. I'm pulling up Apple on my screen. Let me share my Benzinga Pro. We'll get to Apple. So yeah, I mean, I don't know what to think about Apple right here. It legged up from the level. All right, let's go out to the year chart. Apple legged up from where it was trading at for a while. So it was stuck in this range from like last year 130 to down here 110, and it was trading in here for a while. It hadn't really done a lot. And then so we're on the 2-year. I believe we're looking at monthlies right now. A couple good months in a row for Apple. Seems to be hanging out at this 147 level. You know, it looks like some consolidation, trading sideways. But you know, I never mind buying Apple. If you're looking at it for a short-term trade, could it go down a little bit in the short term? Sure. If you're going to hold on to it for a couple years, will it be higher than it is today? Probably. No promises. But yeah, that's my thoughts on Apple.
Interesting fact here from Proton, that if you had paid the equivalent for any Apple product for Apple stock, you would have made 1,000%. Gonna need a time frame for that Proton. Here, let me. I'm gonna pull up my chart really quick here. Get the tunes back on. So yeah, so Apple's got some real potential here. We're watching this this RSI here. We've got this dividend date coming up. And then just looking at this purely from price structure, probably just like what Aaron Bree was saying while it's gone. We've got this nice run. It's beautiful. It's gorgeous. Melanie Schaefer, a Benzinga writer, wrote a really good article about. She can probably pull up, honestly. Apple, Blue Sky, and then Melanie. That's like the worst way to search for something. Yeah, she's got a really good article. You guys should check out Benzinga.com. Is Apple stock preparing for a blue sky run? She gets into the technicals here, and you can see she's using. Melanie's an awesome writer. She really knows technical analysis.
She's amazing. Her and Tyler Bundy.
Yeah, Tyler Bundy's my boy. We've got some really smart writers here. But yeah, she's looking at this. I think this is interesting here, the way that she's looking at this level. Definitely take a look at the article. It's very helpful. It's probably smarter than anything that you're going to get out of the Knucklehead squad here. But I want to let's pull up the 50-day, the 50-day. Let's see. Let's pull up some moving averages, because it's great when you get these patterns, they're continuation patterns, and then your support line matches up with a moving average. And I don't know that if we've really explicitly ever talked about that on this show.
Talked about what?
Talked about so like when you draw a pattern. So like right now, you guys, if you guys watch this show or you're students of technical analysis, you should recognize I'm drawing a pennant, which is a bullish continuation pattern. That's what these blue lines are kind of outlining here. And now what I'm trying to point out is that when the support on your support and resistance, honestly, but when the support on your pattern matches up with a key moving average, which I got the 21 lining up pretty well. I'm not sure what she used. I should check her article. But it's just adding that much more power to it, because people are watching those moving averages. That's technical analysis is partially a self-fulfilling prophecy. If you guys know what I mean by that. So let's just make that thicker. Let's make it yellow. No, you can't even see that. I just don't want to confuse myself. All right, it's a pink line. So we're getting some support here. This is a 21 moving average. It seems to be holding as a good level of support over the past, 6 trading sessions. And this is a daily chart. You can see we held it pretty damn well today. Another interesting thing to see about Apple is that we're holding above now. We were in resistance zone for the 10-week moving average, which is Samantha LeDuc's momentum moving average, 10-week moving average, using the same 10-week moving average on every time frame. You can see that we got this big sell day, and then we ultimately closed right at that level using that 10-week moving average of support back on the 27th. But then we lost it. Let me zoom in on this so we can just break down the drama of what was happening during these trading days over this past couple week or so here. The wicks are getting up there. The wicks are getting up past that moving average, but we can't stay above it. The body of the day sessions is not closing above the 10-week moving average, totally staying below it. Yesterday, we broke it. Yesterday, we broke out of it. Right now, what we have, just at this point in the day, which is not something that you should use to make a trading decision necessarily, we're getting some resistance at this level. But I want to remove this line so you can take a look at just the candle, and let's just look at the story that just this candle tells us. You want to, of course, wait until right before the close, like 15, 20 minutes, maybe even 10 minutes before the close to really make a decision on what this day candle says, and go down to like an hour or a shorter time frame to make a decision. But what we might be getting is a nice hammer here. If the wick goes a little bit higher and the body is more in the middle, that's going to be very neutral. So this can either be a bullish or a bearish indication, or a bullish or a neutral indication, depending on how the session goes. But let's go down to an hour looking at Apple, and look at that. So this is what's really going on. This is the inside baseball on the day session for Apple. We've got this support line right here, and then the bullish engulfing coming in. And so this bullish engulfing candle, of course, is a green candle with a body that is larger than the previous one, pretty much matching it down here. It's kind of like a tweezer bottom. That's reversal territory. So what we're looking for here is probably like a V-shaped reversal, getting us up to this level once again. So I'm very bullish on the session for Apple based on these hourly candles. I'm going to delete all of my drawings once again. But over from a swing trade, from a position trade perspective, I really like where Apple is right now. Now, I mean, something that you guys really got to keep in mind is inflation is a reality. Inflation be doing this, and that's just how it is. All right. Inflation is going up over time. And that's just how it is. The Fed is holding it off, but the Fed's involvement in inflation be doing this, right? Or in the situation. So they're going to remove themselves from the equation. So this little stupid chart that I drew is why really smart people are saying that we are due for a market correction, which is going to drag everything down if it happens. Because that's just how it works. So I see, and if you guys watched yesterday, I see a lot of potential for the growth names that we liked over the summer. And I think if you see it, go for it, but keep that stop tight. And this is just something like, this is always looming. The situation where the market can pull back is always looming. We just have a material reason why. That's the only difference. So we're always keeping the stops tight on those. Like here, let me give you an example. I was in BGFV. Give me a 1 in chat if you guys were in the BGFV trade. BGFV, this is Big 5 Sporting Goods. Give me a 1 in chat if you're in there.
So Neil, I got a question for you about Apple as it relates to the inflation thing. So we know that inflation fears oftentimes hit growth tech stock or growth stocks harder than value stocks. Anytime like the bond yield rate gets changed or ticks up, growth stocks get hit harder. Do you consider Apple a growth stock at this point?
It's a tech stock too, yeah. It's just tech. So in general, it's a high flyer. So it's a high flyer tech stock. In general, high flyer tech stocks go up like this. All right, and then this is where we cry, and this is where we get high. But over time, we've got this median that be going up like this. Within anything that affects the markets, COVID or any like a black swan event or like inflation and stuff like that, inflation fears, anything that's going to affect the market, the tech stocks are going to do this, and they're so heavily weighted in Nasdaq, they're going to drive the whole like indices or at least the ETFs that reflect the indices down. But then if you're looking at like SPY, which is comprises a more balanced or which is composed of a more balanced ratio of different market segments, so it includes some value in there, you go up like this, right? It's less volatile. But the curve, which this is not a really good curve, the slope, if for all our statistics nerds, the slope is not as much. With SPY, it's going to have a less of a slope, so it's a higher growth rate over time, but you have to ride those waves on Nasdaq. So yeah, absolutely, it's going to affect Apple. I mean, you can see it during COVID. Got it.
I just had heard some traders, investors make the argument that Apple is more of like a value stock at this point rather than a growth stock they're looking at. But I think that's just semantics.
Yeah, I think it is a lot of just semantics. Just do what the chart tells you. Like it's whatever word I need to use to group together stocks that are volatile is the word I'll use. And Apple has been one of those. Yeah, it's just a great company. It's very reliable, and they're doing, they're doing a lot of vertical integration in terms of manufacturing and stuff like that. That's tightening them up and making them look like a lot more of the traditional assets that we would have traded in the days of old. Versus like these days of super like .com companies, but still, I mean, come on, let's get real, guys. Yeah, I'm way less chaotic. I got my chaotic out in the beginning. You guys missed it.
I missed it.
Yeah, you did miss a little chaos at the beginning.
When you left, I thought you were just protesting because I brought something up that could be considered the dirty F word. regarding Apple, and I thought that was your way of just saying,
No,
if you want to talk the dirty F word, then you can do it on your lonesome.
Well, I mean, that is true. If you want to talk that dirty F word, you do that on your own time. All right, you be talking that dirty F word around me.
Yeah, we're here for that sexy T word.
Good for you, Proton. 24% growth over all the years you've held Apple is fantastic. I mean, you're outperforming a lot of just day traders. Just that's all there is to it.
Technicals.
All right, so guys, so that we went into Apple. Oh yeah, let's go through that BGFV trade. I'll walk you through it, and I'll walk you through what I did wrong. Which is I don't think I did anything wrong, honestly. I think I did everything right. It's just the trade didn't work out.
Which happens, Neil.
Really?
Yeah, I mean, even the best traders aren't batting 100%, 1,000%. You know, you just gotta win more than you lose.
That's right. As long as you're winning 51% of the time, you're winning. So we got that 65 EMA. I'm going to remove that. Actually, I'm going to leave that on here, but I'm going to turn off my moving indicators. I'm just going to turn on my VWAP. I just need my RZA and my VWAP, and then maybe my Fibonacci. But yeah, so here was the trade. Enter BGFV, looking for maximum gain on this thing coming out of the W. I wanted to capture this leg of the trade, this leg of the trade, this leg of the trade, and this leg of the trade. I captured this first leg, got it, locked it in, put my stop loss up here, and then this morning got whipsawed right back down, but my stop loss saved me. So I lost like $40. But that's what stop losses are all about, guys. This big red engulfing candle is not a good look for BGFV. We shall see what happens, but it did break our little structure, so we'll see. And the only reason I pulled up VWAP is because that was support. If you guys can see, this is the VWAP anchored to the 1st of August. That was support yesterday, and it was resistance the prior day. VWAP, very, very the Fetty VWAP is very useful. I see Mike here with the triple bottom. Yeah, I'm just trying to keep my finger on the pulse of the youth here.
Yeah, maybe 5 years ago.
All right, so there were only 2 people in the trade with me. So okay, I hope you guys put your stop losses in. Guys, do me a favor. If if you've had your ass saved by a stop loss, give me a emoji in the chat, or just a 1 if you're a boomer and you don't know how to find the emoji. All right, give me a 1 or a for the good old stop loss for protecting that money. Ooh, damn, that had a serious history. That scared the shit out of me.
I feel like I'm making a slightly different noise than you are, and I might need a tutorial on how you're producing that sound out of your mouth.
So I got you. So I feel like you're transitioning into the S part without letting the F part ring a little bit more. There you go. And you know what? If you want to put a little what do you call it? A little hot sauce on it. All right, put a little P in front of that F. Well,
I need some work on it.
Do one more, but let that F live a little bit longer. Let it breathe. One more. Yeah, no, but do the hand signal. What are you doing? I feel weird.
Hey, I'll work on that tomorrow. It might okay.
Yeah, okay, so we'll work on that. We'll workshop that. We got time to talk.
We'll work on that.
But
wait,
we're not on stream.
Neil, real quick, I want to ask you. So about yesterday we did Mount Rushmore of technical analysis teachers. I want to know what your Mount Rushmore of technical analysis tools would be. So
of tools?
Yeah, so like you can throw RSI up there. You can throw your young Fetty VOP up there.
Wait, does price count?
Shoot, that's like too obvious. Like,
but that's the George Washington of technical analysis.
Yeah, that's the George Washington. And then who else is on Mount Rushmore? Teddy. Who's the Teddy Roosevelt? Who's the is Lincoln up there? Lincoln's got to be up there, right?
Lincoln better be up there.
Lincoln better be up there. Who's the Lincoln?
Guys? I want to thank you guys for hitting me with the ones and the for the stop losses. So true, so important, guys. Don't forget when you're setting. It's not a complete setup without a stop loss, guys. And depending on how active in front of your triple for Tubby Ninja, guys, you can use a mental stop loss, meaning this is like my uncle level. If it goes down, I'm going to sell at this level. But only do that if you're sitting right at the screen. Only do that if you can be glued to the screen, which not everyone can be. All right, so yeah, it's going to be price. It's going to be the RZA. I mean, I feel like I could. You got it. The order here doesn't matter, right? Does it? We're not ranking.
No, we're not ranking. I mean, it would be hard to rank.
How many presidents are on Mount Rushmore?
Come on, man. It's 4. It's I'm looking at it. I'm looking at a picture of it right now. We've got George Washington for sure. I see Teddy Roosevelt. We've got Lincoln. He's not even American, but
is he?
No, he's Canadian. But Happy, you're throwing me off. Happy's throwing me off with the new profile pic on YouTube.
I know. I was like, who the hell is this?
Yeah, who is this guy? That's our guy. That's Happy. Shout out Happy. I'm looking at the picture right now, and just full transparency. I knew Washington. I knew Teddy. I was looking at Lincoln, but I was looking at Thomas Jefferson. Like, who is this guy? I was trying to figure out who it was. So thank you, Happy.
So I can only do 4. This is bullshit. Like, because it's between VWAP and the fib.
Nah, I don't know if you can do that. I mean, some people think we should add another president to the Mount Rushmore, so you can carve another technical analysis tool in there.
Okay, so we'll just say in the future. When
the next, Thomas Jefferson.
When Joe Biden's on Mount Rushmore. Oh, you're staying. The media trading's kicking in. Not going to take the pain on that one.
I was going to say some people thought we should put Trump up there, but
No, listen, guys. Got to put me on Mount Rushmore. All right, guys? I'm serious. It's serious. That's my best Joe Biden.
That was good.
Thank you. Good. Because he gets in there and he whispers. All right? No, listen, guys. Put me on Mount Rushmore. All right? It's serious.
Now listen here. We need to look at the technicals. Yeah. Well, if you're doing a Biden impression, you need some shades, some aviators, and a nice little ice cream cone.
The aviators and the ice cream cone. Yeah, that's the Snapchat filter. All right, guys. So the BGFV got stopped out. Why? Because I set it up with a stop loss, and it feels good that I protected my capital and still made some money in the meantime. Some other ones that I think are still in play. They're similar. So let me see. FSR, Fisker didn't work out. CX, FMX was like, oh no, what was it? IBN just gapped up. That's a short potential right now. What else am I in? Let's look at Airbnb.
All right. And we do have Tim Quast joining us today soon. He is sponsoring the show. So shout out Tim Quast. Hopefully
so it's not Tim Quast that's sponsoring, it's Market Structure Edge. So
correct.
Big shout out to one of the most interesting new tools for understanding entry timing. How to make better trades in Market Structure Edge. So thank you for the sponsorship, guys. Guys, if you haven't tried out Market Structure Edge, I believe it comes with a free trial. Highly recommend marketstructureedge.com. So at any rate, I'm just looking at Airbnb and I'm just like, I love myself because I bought it. And I think it's gonna pop. All right, we just got this young Dublevet. You guys already know. Just give me a couple tickers and we'll do some tickers until Tim comes on. How about that?
Yeah, love it.
So I see. So Brandon's got a couple already. So since he's already in there, we'll get that. We'll do CRDR, and then we've got Tim here. CRDR. What the hell? Corsair.
CRSR.
Yeah. Okay, let me delete all of my stuff. And then we're just gonna do this one last ticker, and then we're gonna bring on our special guest for the day. All right. So let's just understand where we are now by looking left on our chart. And this was just a level of previous resistance and some support here during this consolidation phase during the big markup on Corsair. And then a serious phase of just consolidation. Could have really been trading this a few times. when it hit the support levels. We had someone asking earlier, like, is it good to buy at support? Absolutely. That's where you're going to get the most for your money. But remember to set up your stop losses. Remember to protect yourself. Now, looking at Corsair for the day, we got this gap down. What happens when you get a gap, guys? What do we say about gaps? And guys, don't be dirty with this one. Don't be dirty with this one. I know that you guys.
I don't know, but Neil, I'm always buying at resistance and selling at support, so I think I need some help.
Yeah, you do need help. What happens to gaps? All right, there we go. Snap, crackle, pop, my man. Good to see you. Scarjo, great retail store. Aren't they supposed? Isn't Gap supposed to do something with Kanye? Has that already happened?
Gap with Kanye?
Yeah. Like jeans or something. I don't know. Like big puffy jackets and jeans.
I don't know. All I remember is when Kanye first started putting clothes out, he was selling like a white T-shirt for like $300, and I was just like,
dude, we all start somewhere. All right, so look. Corsair looks damn good. Corsair is looking like a bargain buy for me, guys. Like, look, we're at this. Obviously, we're going to set our stops, and I think you set your stop. I'm going to set my stop around this support level that was resistance on the 4th of November 2020, and then support on the 10th of November 2020. I like this range, but I also want to see this gap get filled, and I also want to see us get out of the oversold zone, which seems like is happening in force right now. So I like this one. Potential for just with that gap close. Let's see where we're at. I mean, it's $27 stock. Damn. Just closing that gap is going to be about a 6% gain. And then looking at where we are with the supply zone, let's go ahead and just map out that supply zone really quick, and we're going to bring on our special guest for the day. That supply zone is right here, so we're going to get caught here in consolidation station for sure. But everything to me looks like we're going to re-achieve it. We're going to regain that. So I think there is some alpha to be won here with Corsair. Keep your stops tight and be aware of upcoming resistance. All right, so that's the last one, guys. Let's bring in our special guest for the day, Tim Quast of Market Structure Edge. Are you clicking at the same time as me again?
I clicked. I'll click again.
We did it. We literally just did it again.
We're so similar, bro. It's crazy.
All right, welcome. Hey,
there we go. Oh yeah.
Tim.
Hey, Neil. Good to see you. Aaron,
good
to see you too.
It's good to see you.
I'm having mic issues. So if there's an echo, maybe it's all in my head. Maybe it's all the echo is in my head, but my mic isn't working correctly. So if there are technical difficulties, that's the cause. But if you can hear me fine, then never mind.
I like that phrasing. I feel like that should be like a microphone ad late at night. Tim, there was a little bit of an echo, but it's totally fine. Okay. It's totally natural. Welcome to the Spinal Tap of trading shows.
This one goes to 11.
Exactly right. Exactly. Okay. So a real one. All right. So guys in chat, give us a 1 if you're aware of this as Spinal Tap. Give us a 2 if you're 10 years old.
Right, we've just dated ourselves, Neil, and I've got to be at least 10 years older than you. So
I'm 45.
The sectors containing information about this is Spinal Tap are deteriorating already for me. So
we got to have a watching party. I think we all got to get back in touch, take life a little bit less seriously, and watch a fantastic satire. This is Spinal Tap.
What I agree. Yep. If everybody watched Spinal Tap and Monty Python, the world would be fine.
The Monty Python? I'm head nodding so hard my neck hurts, guys. seriously. Yeah. Jeff Cavalieri says shark sandwich. Okay, I'm not going to repeat the review headline.
There we go. That's good.
All right, guys. So thank you so much for being cool and knowing what Spinal Tap is. Extra points if you're familiar with Heavy Metal, the publication and cartoon movie. But Tim, for the uninitiated, would you mind introducing yourself and giving us the truncated version of what Market Structure Edge is? Sure.
So MarketStructureEdge.com is a decision support platform for active traders that is predicated on market structure, which is a jargon term that means the behavior of money behind price and volume in context of rules. So rather than just looking at charts or looking at the financial performance of businesses, we look at supply and demand. That's what it is. Sentiment is demand and short volume is supply. And by buying rising demand and avoiding rising supply, one can do well in the markets. And that's the idea behind Market Structure Edge, which, by the way, you can try it for free. You can try it for 14 days, name and an email. And if it's not right for you, no problem. But it's a great way to get introduced to the idea of market structure. And today we see great examples of that. Robinhood was volatility. That's HOOD. It's only there are 4 days of data. I think this is the 5th day of trading for Robinhood, and it was volatility halted 3 times between 7:30 and 8 o'clock this morning Mountain Time. So 9:30 to 10 Eastern Time. And and how does that happen? And maybe I'll stop there, but we can talk about what that means and what volatility halts are. We say you can beat the market by understanding it. That if you're going to be a trader in the stock market, you want to understand how it works. It's a great strategy. As I said on the pre-market prep show Monday, I do Market Structure Monday with that gang at 8:35 Eastern Time. I quoted Sun Tzu. I mean, how often do you get to do that, right? You know, that tactics without.
I try to insert it into every conversation and never
right,
comes
right.
up.
I mean, there's always an application for Sun Tzu, who wrote The Art of War, by the way, folks. So he said, tactics without strategy is the noise before defeat. And we don't, that we're not after defeat, we're after victory. So a great strategy is to understand how the market works.
So beautifully put. And there's one thing that I just want to point out because, and I'm being totally authentic here. The first time, Tim, that you walked me through Market Structure Edge and just explained market structure, it was one of those aha moments for me, a breakthrough moment for understanding how markets work. In market structure is the operative phrase here. So folks that are coming in here from like strictly technical analysis backgrounds that don't really know, or perhaps have heard that used in a different way. A lot of Forex guys and gals like to say market structure in reference to the price structure that they see on a chart. So they will say, okay, like looking at the candlestick chart, this is the market structure. That to me, it doesn't make sense. I just say price structure. So that's what I mean when I say that. And then when Tim is saying market structure, you are talking about the constituents that make up the buyers and sellers in the market. So the structure of the buyers and sellers.
That's exactly
who they are
right.
And how they're doing stuff.
Exactly. You were talking about Gap earlier. Well, Gap pays a lot of attention to the demographics of its customers. What kind of people come into the stores? What are their ages, their incomes? What kind of products do they consume? If you don't track all those things, you have a difficult time with your supply chain. You don't know what to put on the shelves. And so you could look across the whole. What do we fixate on in the market almost every day? It's data. There's purchasing manager index data, PMI data. It's called the ADP jobs data was out today. Tomorrow we have jobless claims. There's inflation data. There's all the data points that the Fed watches, and then we look at the stock market, and it never occurs to us, I guess, that there are demographics in it. Well, there are. There are discrete segments of customers in the marketplace with different purposes and time horizons, and understanding how those behaviors interact with each other is very important. Passive money that follows a model. So that'll be indexes, exchange traded funds like Kathy Wood and ARK. They're going to follow a model. They have a model and a basket. They may change it because that's an active ETF. But it's model-driven behavior. Quantitative investing is model-driven behavior. Well, it's completely different than stock picking. And by the way, passive money is twice as large as a demographic in the market in terms of driving volume than is stock picking. and machines that want to own things for a day or less. I say high frequency trading or fast trading is an investment horizon of a day or less. That's it.
Yep.
And that's 54% of trading volume in the S&P 500. Well, it's got a different objective than somebody who's picking a stock and wants to own it for 3 or 5 years. And it's very important to understand that those behaviors affect demand and supply, and it's measurable. You know, you talked about Corsair. We can look at that data. I can see that it's got a demand problem.
Tim, do you want to hop right into it? Can you
let's
share?
do that. We'll just try to. I want to support your dialogue. And by the way, you made very positive comments, and thank you for that. And I want to give you kudos too. Benzinga is running circles around everyone else when it comes to providing great information for people who are active in the markets. You know, we've done all kinds of things, and you are owning that show. You are doing it better than anyone, and so congratulations to you.
Tim, thank you. I take full credit for all of that, so I can't thank you enough.
As you should.
So Tim, yeah, I think that so what Tim is saying about the broader market is you can look at it from a macro perspective, like what are the objectives and tactics for each individual market participant,
right.
which Tim has categorized. And Tim, I'm going to bring your screen up here.
Okay.
But then you can look at each asset. So like you guys know that when we're looking at like Corsair versus looking at Apple or something like that, they're going to respond to different moving averages. They're going to play with the VWAP in different ways and stuff like that. Each asset has a personality. Well, let's dig into what does that mean it has a different personality. So Tim.
Right.
Yeah.
Yes. So if we look at Corsair here, this is a portfolio view. And so you will get ticker over here on the left, and there's the name, and then market structure sentiment is the demand measure. And notice that demand is topped. Short volume is the supply measure. Short volume is not short interest. Short interest is a 1974 measure created by the Fed to track the use of margin accounts, because that exploded when we left the gold standard in 1971. Well, who's driving around in a 1974 car? Well, not many people, right? So why would short interest be a useful metric for an electronic market where over 95% of all trades occur on algorithms, and the market is at 100% electronic? The market was 0% electronic in 1974. But in 2009, FINRA started requiring brokers to report whether the trades they're handling involves shares that they own or their customer owns, or are they borrowed? What percentage then of that trading volume is coming from borrowed stock? Well, 48% of Corsair's is, almost half of it. And then here is the average size of a trade. You know, stocks trade thousands, maybe Apple trades hundreds of thousands of times a day, and it trades $20,000 at a time.
Can you scroll up a little bit just so our banners don't hide?
There we go.
There we go. Okay.
And Corsair is a tenth of that. So it's a much less liquid stock. And the lead behavior here is passive money. Why is that occurring? Tends to happen at the transition from one month to the next. Passive money will true up its tracking versus benchmarks on the last trading day, on or around the last trading day of each month. Then in the new month, money comes in. And interesting, quick aside about this. Passive money in the S&P 500 last week fell 7% week on week. And the use of derivatives declined 2%. Well, that's not good. If you see a decrease in those behaviors into month-end window dressing, it may indicate weaker demand. Passive money rebounded very nicely on Monday, but it has a big hole to fill. And so the market's really struggling because of that. That's the cause. If you have a big decline and then a little bit of money comes back, the market will really struggle to rise. So if we look at going back to Corsair here, if we look at the data view, this is the demand side up here, and this is the supply side. Well, look at it. Stocks that spend more time below 5 than above it tend to do poorly. Demand needs to be above 5 for demand to exceed supply, in effect. It's a 10-point scale. We normalized it. It's an algorithm, but it tells us that this is as good as it got right here. If you were in Corsair at that point, that's probably, if I were trading it, when I would leave. and look at the supply side. The trend line for the supply side is rising, and it ticked up yesterday to 48%. That's, over 50 is worse than under 50. But I look at that and say, well, the demand is dead flat and has topped at 5, and supply is increasing. The likelihood that it can sustainably rise without those conditions changing is, as the statisticians say, a number approaching 0. It's going to be very difficult.
Okay, so there were a couple terms that you used that I just want to backtrack on to make sure that everyone's got them. One that gets used a lot that will get tossed around by folks that have a sort of a macro look at the markets is window dressing. So what do you mean when we say window dressing?
So window dressing, just as it sounds like, you put stuff on your windows to make them look better. That's window dressing. And so if you're managing money for someone, like a hedge fund will do, or if you've got managed accounts, I do. Our financial advisors regularly give us reports on how those funds are performing. And so those funds will want to do the best they can each month to lock in gains or make sure that they're following the model. If it's a low volatility model, you're going to adjust what you're doing to try to make sure you're achieving the objective. Well, that tends to happen on a monthly basis. And so that's why we use the term month-end window dressing. In the last roughly 3 trading days of every month, that's what's going to happen. And if you've got something in your model that has outperformed the benchmark, you get rid of it into month-end window dressing. And then suppose that stock is reporting results, and they report great results, but everybody's overweighted, like Facebook. So then Facebook does fine, but it falls because everybody's been overweight Facebook. And now maybe in the new month it does better because money comes back in and buys it. But that's how to think about those things. Very important concept about how the market works.
Yeah, I think so too. And then another one. So we got a question from chat here. Can market structure edge be used effectively intraday?
That's a good question, Chad. It's not designed to give you a daily trade. Do I? Sure, I do on occasion. Last week, 2 weeks ago, I bought and sold Tesla in the same day because it went up 5%. I'm happy with that kind of gain. And so in the sense that it will tell me, okay, the supply demand equation in Tesla is excellent, so I'm going to buy it. Then if it goes way up, I may sell it. That is the degree to which it's a daily trading mechanism. But we think in terms of 5 to 8 days. We want to have we don't trade price. We want to trade sentiment, and price is very capricious. It can be up one day and down another day. But what we're after is, what's the trend? Where's it going to be in 4 or 5 days? So I sold Nvidia today, and I bought it just 2 days ago. So I got a nice gain, and I'm going to take that gain. But that's how I think about it. I think it's a short-term trading decision support tool because the market is short-term.
I'm going to take a slightly different angle on that and say 100%. If you're trading actively intraday, you should use market structure edge to understand what is going on. Because if you're trading so much, there's going to be a camp of traders that are just going to trade the same handful of assets only. And that's great. That's good for you. You should understand the cycles of what's going on with that and the market structure for those. It's just like trying to trade a stock that's in a trend. You should know that's relative strength to the rest of the market. You should also know the market structure behind it. Who's in control of the steering wheel. And then if you're someone that trades a bunch of different assets, checking on the market structure and where it's at, I think is extremely useful intraday. But Tim, I totally get your point about how this is perhaps like an easier to understand thing for someone that's doing more of a swing position type trading thing. But I think totally intraday you're going to want to have something like this.
And Chad, to finish this, to put a finer point on it, here's why I sold Nvidia. So I bought the rise in demand and the decline in supply. That tells me that there's a good chance of gains. May not be this immediate day, but then sentiment stopped rising. So, and notice this, supply started to creep up, demand has flattened. I just took the gains, and I'm very happy with a 2 or 3% gain, because if you take 2 or 3% and you repeat that every few days and you don't lose money, you'll get to the end of the year and go, holy cow, look how much money I made. And that's what high frequency traders do. You know, it's very, I'll go so far as to say it's impossible for you and I to out-trade Hudson River Trading. Hudson River Trading has servers in 200 markets around the planet, parked right next to the exchange operator servers, connected by a 3-foot, Cat6 cable. And they know everything. We cannot compete with that, but we can see what's coming 2, 3, 4, 5 days later, and they're not looking at that. So that's how we have an advantage over the machines. But intraday is very difficult. And notice here, Alibaba, that's fast trading. Hudson River Trading is a major force in the market, like Citadel and Virtu and Quant Lab and Jane Street, Infinium, GTS, firms you don't hear about. But those people are very difficult. You can't beat them intraday. So that's why we think about 2, 3, 4, 5, 6 days.
And Kyle James says, I like this guy. Kyle, thank you for participating.
You're among a small group then, Kyle.
Well, I'm in that group, Tim. Okay, guys, what tickers do you guys want to look at? I feel like it would be really cool to look at some of the popular tickers that we've been covering over the past, week or 2 weeks, and then see what the market structure is behind them.
Okay.
And I'll get us started while we wait on the delay. I would really like to get an idea of what is going on with Palantir.
Okay. Yeah, it has literally been months since I have traded Palantir. I like Palantir. But once again, what we do is we test the data. You can test anything and validate the data. This is what Profiler is. So we have immediate validation of whether the data work. So if we want to look at Palantir and say, well, what should I do if I'm going to buy or sell Palantir? I like to default. We build the default to say you want to buy the rise over 5 and sell the return below 5, because most gains, let's call it 82 or 3% of gains, tend to lie in that bracket. And that's what we're trying to do. Now, it's not the only way to look at the data. The data itself will tell us, well, buying and selling 5 produced a 7% loss over the trailing 90 days. Buying and holding produced a 2% loss over that period of time. Well, clearly that's not great. And if I look at the trading periods here, loss, gain, loss, nothing. So the odds are terrible. I look at it and say, I have less than a 25% chance of making money in Palantir. Well, let's find something else, right? That's how I think about it. So now let's look at the data and see what is it that's going on. Well, you can see there, you could have traded Palantir back here. Rise above 5 when it gets to 10 and short volume is right at the trend. Well, you can stay as it begins to drop, but the opportunity for gains is probably gone by that time. Demand is diminishing, even though the supply side did too. Once demand starts coming down, very difficult to produce gains. And look what it's doing now. It got back to the fulcrum of 5, but that tells us there's no excess demand. Well, if there's no excess demand, the stock's not going to go up. This is the most basic economic principle of all. And it applies to any market, including the stock market. It's just another market with, supply and demand.
That is, I like how you finish your statements. You always end with axioms. So guys, I think what's going to be interesting now is if we look at AMC. I'm sure you get asked about that one all the time.
Yep. So let's profile AMD too, and it's once again a great stock to trade. I'll use the default again, and and if you just use the default, you get a 13% return. S&P is up 10% over the 90 days, but buying and holding it was much better. What that tells me is it's spending a lot more time over 5. So 50 of those 90 days over 5, hardly ever at 1. It might make more sense than to buy AMD at 1. And son of a gun, just like that, we've got 38% return versus buying and holding it and get 45. But we did that in only 50 trading days. We have another 40 trading days to go trade something else like Palantir. Let's go take that money and trade Palantir. Let's go trade Nvidia. Let's go trade Facebook, Apple. You can trade anything. What you want to do is reduce the time you spend producing returns. Time is risk. That's why high frequency trading is the least risky behavior in the market. People think, oh, they're speculators. No, they're putting their money to work for fractions of seconds. The most risky thing is buying and holding, because you don't know what will happen. over all that time, and you leave all the price setting to behaviors that have shorter horizons than yours. So this is how it works, and it works. Now we know, right? Since it only spent 11 days at one, we know that roughly, what was it, 79 days are above one. Well, we want to get as much of the gains as we can, and that's how you use the data. It's pretty simple stuff, really.
So okay, so we're getting a question from someone in chat about the supply and demand. Can you just show for one of your for any asset? I don't know what you guys do. You want to do it for? Let's do it for BNGO. I think that'd be interesting since someone asked about it.
Okay, so EMGO.
BNGO, the Bionano Genomics.
We may not have that in here.
Benjamin, Nathan, Gregory. Onomatopoeia.
Sometimes, so we focus on about the 3,400 largest stocks, and oftentimes we won't have ADRs unless people ask us. Very easy to add something. If there's, but we use GICS data, so S&P global GICS data, and sometimes that means we won't have a stock, but we could have it tomorrow. So we'll have to pick something else, Neil.
Yep, and yeah. What about SOFI? Do you have SOFI?
I think we do.
Okay, so let's look at that. And the question is, when you're looking at that, where do you see supply and demand? Based on the way you display your data.
Yeah, let's back this. And there's not a lot of data, right? That's fairly newly public. Came public on it looks like 15th of June.
Mm-hmm.
Well, it's been, and notice the short volume for some reason. I'll have to check this. Sometimes with new companies. We like 20 trading days. So for us to have a good, solid view of the trends and the behaviors and the comparisons, we need about 20 trading days. So this is close to that. But what this tells me, just looking at the demand side, is the demand side's been woeful. There's the best day for demand was when it came public, and it's been horrific since then, really. And that's why. You could talk about any other reason, and the problem is there just isn't enough demand. Now, when it rises over 5, then we can take a look at it and see if it has staying power. But it's again a demand problem. The whole market has a demand problem, by the way. Yep.
So yeah, no, I was going to say
I won't go down that rabbit hole.
we don't have to. But so for the question for the chatter here, the demonstration is above or below 5. On that really easy to read sort of timeline in Market Structure Edge. But then SoFi, like we get asked about it very often here, but I think that it's retail traders that are very interested in markets, really like the SoFi story and are very active in it.
No question.
No question about it. But now we're talking about the actual structure of the entire market, which is much larger than just like us like stock market junkies that are here retail trading. So we only make up a portion of the volume there for SoFi. And so you're getting, so actually your experience here in chat with everyone talking about SoFi, you might see it on like Twitter and stuff like that, is going to give you a bias that just the cold hard data here in Market Structure Edge is saying is actually not accurate with reality or not congruent with reality. So really cool.
Exactly.
We're at about 30 seconds. I'm wondering if there's anything that would help people get a better understanding of Market Structure Edge, or something you want people to take away from this conversation. If you wouldn't mind saying that, Tim.
Well, the best thing, my self-serving comment is, whatever you like, whatever you're good at, if you're a good technician, if you're a good fundamental stock picker, however you approach the market, always look at it through the market structure lens too. If you love GM and you think there are great prospects there as the chip shortage improves, look at it from a market structure view, because supply and demand are the major determinant of outcomes, no matter how you want to analyze stocks.
So that's fantastic, Tim. I really want to have Market Structure Edge open on the show. So maybe we talk about that. Maybe we can talk about starting to use Market Structure Edge here and get technical, because I remember the last time we talked, I said that market structure. I said market structure is part of technical analysis. So I think we have like varying philosophies, but we're coming to the same conclusions here, which is really cool. So guys,
it's like modern technical analysis. It's the next generation.
You don't even need a marketing team. You just got Tim Quast on Market Structure Edge, guys. Guys, the website is Market Structure Edge. It's in the chat, guys. Click the link. Get on over there. No credit card required. All right, just put your email in. Put
Just
your name
name an email. That'll give you 14 days, and you could give it a try. And you'll get my daily market desk notes too. So, I bloviate, but I think it's helpful. I hope it is.
It is. It really
it's sometimes entertaining too.
Yeah, it is also that. Tim, thank you very much for being with us today.
Thank you, Neil. Aaron, good to see you guys.
All right, guys, Market Structure Edge. I seriously mean that. That is, one is I just want to thank Tim for coming on, but that stuff's that good new.
Did Tim know that?
It really is.
That new. Did Tim know that bloviate is our word of the Benzinga channel, or is it just a happy little coincidence?
I think he's just part of the Zinger Nation, dude.
Shout out Zinger Nation.
All right, guys, check out Market Structure Edge. Big thanks to Tim for coming on the show. I would love to have, like, if I'm looking at my chart, I want my charts plus the market structure for every ticker I look at. That would be so nice. Iron Lion just shooting questions at me. What is my favorite growth stock? I don't know.
We do have
Aaron B's career.
Oh, wow.
All right, guys. How many likes did we get to? If we got to 100 likes during this video, we'll do Spice Girls. If not, we will not.
Let me do my little KPI analysis.
And you guys, and this is your last chance. If you get the video to 100 likes, we'll do Spice
We're at
Girls.
66 right now, so a little disappointing. I'm disappointed.
All right, so I'm going to give you just like a few seconds. We'll do 20 seconds, all right, for you guys to hit the like button. And if we get to 100 likes, we'll do Spice Girls.
I'm rooting for it because I want to redeem myself from yesterday for not dancing well enough.
Yeah, I'm rooting for it for the exact same reason. So, guys, keep it coming. Keep the like train coming. Keep it coming.
Oh, we need 8 more. We're at 92 likes.
Well, you guys are insane.
We just went one. We just went down one.
Neil doesn't play the guitar until it's 150 or more. Then I play Slayer. You guys have to like either Anthrax, Slayer, Metallica, or...
Yep, and Neil, we do have a Moon or Bust show coming up right now, but we hit 100. We're at 105.
All right,
likes.
We got 100 likes. All right, guys, and then that means that it's time.
And stick around for Moon or Bust, your altcoin show. If you're interested in cryptocurrencies, altcoins, we got Logan Ross over there, Ryan McNamara. Great show today.
Really wanna take a sec, 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 take a sec.
Don't stop, Aaron. Keep going, Aaron.
30 seconds.
Guys, thank you so much for tuning in. Thank you for getting us to 100 likes for the Spice Girls. This has been another episode of Get Technical. I'm your host, Neil Hamilton. With me, as always, has been producer AB. Big shout out to Market Structure Edge for the sponsorship today. Make sure you check them out. As always, happy trading, ladies and gentlemen.
And stick around for Moon or Bust starting right now.